Welcome to Flywheel, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on-chain, you've come to the right place. This is DeFi Dave, here with capital K, and we're here to help you harness the power of the flywheel. And on this episode, we went off-chain, but we went to the world of law, the world of the courts, the trials and tribulations of being a lawyer with Ryon Nixon on, who is the founder and managing partner of Horizons Law, which is a boutique law firm that specializes in crypto, DeFi, OG in the space from like 2015, 2016. He's worked with everybody from Solana General Counsel to SNX, like hell of a resume, hell of stories he shared with us. This is probably one of my favorite episodes I've ever done, because this is a kind of podcast that I would like pass along to my founder friends or founders that are just starting off and or like VCs that are just like starting off. I'm like, you need to listen to this. This is required listening if you want to be in crypto. Like, that's how good this podcast was. Kiet, what are your thoughts on this one?
Absolutely, man. I think Ryon is a gem in this space.
Yes.
Dude, he's obviously a knowledge buff. And more importantly, he's like spreading the ethos of crypto into the legal realm. Like, he's teaching lawyers tokenomics. Like, that is super impactful, and that will for sure have reverberation throughout the industry for many years.
He's truly a well-rounded individual, because not only is he such a wealth of knowledge in this space, like, doesn't matter the chain, the application, the area, but he's a fighter. He's not afraid to get down and dirty. I mean, he was literally an MMA fighter in another life, but now, like, in the legal arena, like, that's a whole nother ball game, quite literally. So and like all the different things that Horizon's doing, like, it's more than just a law firm. It's kind of a disservice just calling it a law firm. Like, they have tokenomics, they have help with like development, they have like
fundraising.
He has like another whole entity that does like fun stuff. Like, there's so much like that he offers, and like so much like he can do, and like it's just he's been a homie of mine for like the longest time. So it's like really happy he's a busy dude, so it was like really special finally getting him on.
Yeah, and one note to the listeners: please bust out your notepad and write down notes. Like, he gave such tactical advice and like applicable today. So like write down some notes, guys. Write down some notes.
Yeah. And before you get that notepad, you have to go and subscribe. You have to, if you want to catch up with all the alpha, we get because we will get more guests like this. So you got to subscribe, hit that bell button, give us a like, let us know what you think of this episode, because I think it was pretty fire. Don't forget to follow us on Twitter at Flywheelpod. Hit us up on our Telegram group at Flywheelpod. You can follow me on Twitter at DeFi Dave 22. You
can follow me at 0xcapital_K.
And let's get the flywheel spinning on this one. I'm really excited. Let's go. Let's get it spinning. Do you hold ETH but don't know what to do with it? Want to earn those juicy liquid staking derivative yields but don't know where to start? Well, FrxETH is there for you. FrxETH is Frax's native LSD solution, allowing you to earn boosted yields in multiple ways on your ETH. If you want to get started, go to app.frax.finance and turn your ETH into FrxETH today. Hey everyone, today we have a very special and unique guest. I guess today we're hearing from the other side. A lot of times we have founders on, but this time we go to the law, because this time we have the founder and managing partner of Horizons Law and the founder and GP at Marin Digital Ventures, Ryon Nixon. Ryon, how are you doing today?
Great to see you again, Dave.
I know.
Nice. Good to see you guys. Thanks for having me on the show. It's been awesome.
Yeah, dude. Thanks for coming on. Like, we've been trying to set this up for so long. We've been talking about it, like all the different things we can discuss on here. And we finally made it work because, I know you're a busy dude because you're a lawyer in crypto. I don't think there's like probably a busier profession right now.
Yeah, especially right now, Dave.
Oh my God. It's
been fucking madness, man.
Yeah. I mean, there's so many places we can go, but for people that are unfamiliar with you, can you give it a little bit of your background? How'd you get into crypto law? Because it's a very niche part of the legal field.
Yeah, sure. So my background, corporate and securities lawyer by training, graduated from UCLA, went and clerked for a federal judge. That was pretty cool. Did some complex like federal litigation for a bit. That was just kind of not my jam. I was friends with Adam Draper from undergrad, Boost VC, Adam Draper.
Wow.
His dad's Tim Draper. Yeah. So, I was hating my job in litigation, and I went to Adam and I was like, "Hey, I hate what I'm doing. Can I speak to your lawyer? Because I'm thinking about quitting the practice of law." So I talked to Adam's lawyer. He's really great. He's still a mentor to this day. Said I hated what I was doing. If I could work for him, he said, "Unfortunately, I just hired somebody. I'm so sorry." I said, "Hey, well, I want to, learn how to work with startups, be a lawyer working with startups. I'll work for you for free." And he was like, "Let me think about it." Grabbed my resume. He called me later that day. He was like, "Look, you have like an excellent resume. You've really got some good stuff here. I'll pay you on an hourly basis, right? You can work for me at night." So I was working at some firm and then moonlighting for Adam's lawyer at night. Eventually I came in full time. It was pretty sick. I got exposed early on, 2014, to like early Bitcoin plays, early ICOs, all the stuff that Boost was doing. Yeah. So it was very cool. I eventually got an offer from an in-house position, non-crypto, and kind of, they sold the dream to me of this new place, this new opportunity. And I went and worked at this travel like tech startup, which eventually blew up. And I don't know, if we have more time, we can go into that story, separately, because that's a whole like money mismanagement, fraud, it was tied up in civil litigation, everything about criminal charges, all this crazy stuff. And I
all
was
the
just kind of
drama
at this,
right there.
all the drama, man, all the drama. And I was
It
kind
teed
of
you
at
up
the center of
perfectly
it.
for crypto.
Yeah.
Wait, was this like before you got into crypto law? It blew up. Yeah, it is before you like started your own firm. So like,
Yeah.
yeah. So
Right before,
let's go in there. Like, what happened to this travel startup that you work for?
Yeah, I mean, there's definitely some lessons learned for founders in this, and we can jig into that a little bit more, later on as well. But hired a ton of very expensive people, a massive like building. They got this like 250 person building in San Francisco when the team was like 70, and it's like, hey guys, not many people know this, but the margins in travel, like Expedia and all them, the margins are very tiny, right? So it's really a volume business, and we weren't doing a lot of volume. And it's just funny being a lawyer that's there, and I'm like, hey guys, like this kind of doesn't make sense to me. I mean, I know I'm not like, the CFO or the head of BD, but like something doesn't smell right here. And then my boss, who's chief legal officer, was like, hey, you want to speak up about that stuff? We can just fire you. And I'd be like, whoa,
like, stay in your lane. Stay in your lane.
Stay in your lane. Yeah. And I was like, what's going on? Right. And it just kind of snowballed from there. There was this like inner like dispute, inner turmoil between one of the founders who was the CEO and the other founder who was the president. And my boss was the CEO's personal lawyer. So there was a conflict there. And then I was sort of on this branch, but the president hated the CEO and was like, hey, what's going on here? Like shit's not like working well. What do you think? And I was like, look, this shit's like super corrupt. My boss, he's based in LA, flies up to San Francisco once a month and just finds one thing to nitpick. I'm doing all the work. You're paying him a huge salary. Like, what are you doing? And he was like, well, what do you think we should do? I was like, we should get rid of my boss. And he was like, well, why don't you write one of those memos you lawyers like to write, and I'll bring it to the board. And I was like, I bet. Like, how much time do I got? It was Friday. And he was like, you got 4 hours. The board meeting's on Saturday. I'll wait up for it. Typed up some stuff. He gave it to the board. My boss, the CLO, resigned. I don't know if you guys have ever had that like evil, like horrible boss, but this guy was that to me. I mean, this guy would call me on Christmas. He had nothing to do. And he'd be like, hey, what's up with XYZ contract? And I'm like, sorry, man, it's Christmas Day. I didn't do it today. And he's like, well, I guess it's not going to get fucking done. And he'd hang up on me. And I'd be like, yeah, like all the time. I was like, is today the day? Is today where they let me go?
Yeah.
Got him fired. Thought that was like the biggest like toxic thing in the company. It wasn't. It was like everything else. So by the time I eventually got rid of him and tried to get control of this company just to help, it was all going down. So, Yeah. Wound up the company. That in itself was a major lesson learned. Like this company had raised almost like $40 million. So it wasn't a tiny startup, it was in series A to B mode. Winding up a company of that size is in itself a very like valuable lesson. So now I'm grateful for, going through that. But at the time I was like, oh man, what am I going to do? I didn't want to go back to my big firm, my first firm, which just sort of sweatshop me, didn't like what, this startup ended up being. And I couldn't go back to my old job, right? At Boost, because I was gone too long. I was gone for like 18 months. So I turned around and I was like, all right, I'll start my own firm. I went back to Adam. I went back to my old boss. I was like, hey guys, this is what I want to do. Adam, I'll work with the shittiest startups that just need privacy policies and terms of whatever. I'll do the boringest stuff. I just don't want to be mistreated anymore. And I can't work with your lawyer, with my old boss, right? I was gone too long. So just let me come in. And it wasn't that easy. I had to like hit up Adam, I think, like 30, 40 times. He's a busy guy, very busy guy.
The art of following up. I want to point on that, like, it's so important. If you really want something, following up, you can never do it too much. And the more you follow up, the more you want it. Like, literally, you followed up 30, 40 times because you
30, 40 times.
Yeah,
literally.
Because it's like, this is a do or die moment, basically.
Yeah, it really was. I was like broke as a joke. My girlfriend that was like living with me, she's like, oh, cool, I'm dating some like tech lawyer. And I was like, yeah, honey, but, I'm starting my own firm. I'm broke, right? And she told her that on Wednesday. She picked a fight with me on Thursday, and she moved out on Sunday. And I was like, yo, man.
Well, she wasn't ride or die, so.
She's definitely not ride or die. So with this, I was like, I'm going to follow up. And guys, to any of your listeners, as a tip, being persistent is a major key, right? If you are being persistent like that, where you are reaching out a many number of times, I would always condition it. I would say, hey, look, you haven't told me no, until you say, hey, you're bugging me, or no, this isn't going to happen. I'm going to keep following up. I would every third message, I'd put something like that. Just let me know if I'm bugging you and I'll stop, but I'd love to get in there and get in front of your projects. I'm really pumped of the possibility. I read this thing. I mean, I'd come up with all these reasons to reach out,
Yes.
And man, one day he called me and he was like, look, I talked to Jared. That was my old boss. That's his lawyer. And he said, come on in. So I came in and one of my first crypto clients was MyEtherWallet. So I don't know if you remember that hard fork.
Mew.
Yeah, with Mew and my
that's
crypto.
what I was using in 2017. Going on Mew to do all the transactions.
Yeah.
I have a question. So in the 18 months you were at the travel startup, were you still keeping track of crypto? Were you still like seeing what was going on, or not really?
So, I mean, I was sort of like half in it because this job, when I took it, I mean, there's so much more to it than this, right? It was just all of the crazy stuff that was going on. Plus it was sort of this like surveillance state. Like, remember I was one of the attorneys. So I would see all the stuff that the executive team were thinking about and looking at. And these guys you'd have a key card. So you tag in the morning to get in through the, through the door, because it had security. But they'd have a timestamp on that. Right. And then they'd also timestamp you when you left. And they were using that to make termination decisions, bonus decisions, like all this crazy stuff. So there was like all of these other weird, just not normal distractions. Like I had this game I would swipe in, and then I had like a janitor key that I took, and I would use that to swipe in and out all day if I went somewhere. So it looked like I'd get in. Yeah. And I'd leave, 16-hour days. So anyway, I mean, long story short, I was really, in this perilous situation.
And you're half in and half out of crypto. So you like kind of knew
what year was this? Yeah.
This was 2016, 2015.
And you were in SF at this time, right?
Yep. Correct.
Okay.
Yeah.
And so like the whole like Ethereum scene was like buzzing, like beginning to buzz around then. Like there was a bunch of meetups and stuff. I remember hearing stories about that. Just like the first ones. Yeah, man. That time in San Francisco and for the next couple of years after, in my opinion, up to COVID, SF was really this big hub of activity in the space.
Yeah, man. So, when I finally got out, went back into Boost, started working with Taylor, when she was at MyEtherWallet, helped her through leaving MyEtherWallet into my crypto. That was wild because I don't know if you guys were deep in the space back then, but
Yeah, I remember hearing about that split.
I remember.
Yeah, it was contentious. We took the Twitter handle, which was not the right thing to do at the time, and that's what the law said as well. And I advised that, just to be clear. But here were Taylor and Kosla were like best friends, and then they become extremely wealthy. And this company they were working on is sort of like this star in the space at the time, but no corporate docs, set up as an LLC instead of a C corp. Like everything was just done just sort of quickly, and just so they can launch, right? But it made things very complicated when Taylor was trying to leave, because there was no CEO, but she kind of held herself out as CEO, and the space knew her as CEO. So she couldn't start my crypto without getting out of MyEtherWallet. But how do you do that, right? Because they were sort of like locked in this battle. So, I think this goes into maybe like war stories if you ever want to hear some of those. But this is a great war story because I just started, right? It's just me. Remember, I was going through a hard personal time, hard financial time. And it's like, oh man, I'm like talking to her. She's like, we went through three big firms. Like, fuck are you going to do? And I was like, I'm the best. Don't worry. And I'm just sort of like, we'll figure it out.
Figure it out.
I start sweating,
No, I got this.
Yeah, I got this. But I did come up with a really, I think, a smart strategy, and it worked. Was I gave Kosala notice, right? You can give notice of an intent to dissolve the company. So I said, hey, we're going to dissolve the company. Taylor and this minority shareholder, gave written notice of dissolution, right? But I gave notice right around this time. I mailed notice like December 22nd, right? And it went to whatever, his old place, and then it kicked to his, I don't know, place in Malibu where he's whipping his Lambos, or I don't know anything about him. I don't know what he's got, but I'm sure, right? But who's checking their mail, right? Well, nobody, especially who's checking it around Christmas? Probably nobody, but that's not my problem, right? That's the law says you have 10 days once you drop it in the mail. So I did that, was dissolved. We went into the mediation, like negotiations, and his lawyer was like, we had all these documents, internal documents we turned over. And he was like, are these the whole universe of documents? And I was like, these are the whole universe of internal documents that you, counselor, cannot get your hands on. And he was like, no, that's not what I asked. He said, is this the whole universe? And I said, no, it's not the whole universe, because anything that's publicly available is not my problem, it's your problem, right? Like, that's not me, that's you. You have to do your own diligence. And he goes, he like whips out this thing, and he's like, what's this? And he like slams it on the table, and it was this notice of dissolution. And I was like, yeah, company's dissolved. You ready to talk? And we did a deal, So but at the time it was wild. Like I used to do like mixed martial arts, right? So I had done this like hard fight, like smoker / training session for the pro team. So I had tore my arm. So I'm in this negotiation, and I have like a 5XL like button up shirt, because I have this massive cast and like robot thing like plugged in here, because you could see here it's like ripped, and they did surgery here, and I'm sitting here in this big sling doing the negotiation. It was the craziest time, man. It was so crazy.
So is the publicly available document was a dissolution notice you sent?
Yeah, because it would reflect it on California like Secretary of State website that it was now dissolved, right? And they'd have that notice and everything in there. So so it worked out. And from there, Polychain led their Series A, got very close with Polychain. That led to me working with a lot of portfolio companies, which led to, Solana, and then, doing stuff with Joe, Dave. I started working with SNX. And at this point, it's sort of like a who's who. Like we've worked with a lot of the top projects in the space. Yeah.
So that my crypto story was like your do or die moment. That was like a defining moment of your career, because that went well, and it led you to Polychain, and that was like, yo, look what I did. Like, and it showed like what your ability and your skills, and like that got you to the next level. Like it could have easily went the other way, and it was like, oh, like what am I going to do now? But like, no, it led you on the path that you're on now. I want to touch on, so you said you're in SF in like 2015 to like till like COVID. Like, What was this? I want to get into like what the scene was like in SF, because I just feel like there are so many successful founders, investors that were all in that scene. Can you paint a picture of what it was like being in SF during that time and like what was going on?
Yeah. So I'll say probably the best sort of example of SF during this time period. And again, let's say it's like, 2016, 17, like right after the DAO, hack onto, the next bull into that bear to 2019, maybe 2020. So I was at Polychain. That was in the Asana building, right? 1550 Bryant. They're not there anymore. So this is, who cares about giving the address? But down the hall was Wire, right? The fiat on and off ramp, WYRE.
Oh, wow.
So Wire had rented this massive space, sort of very different, to be clear, because Wire is dope, but very different from my last position. They had projected themselves to grow a lot, and then I think crypto market started blowing up, and they had to like reduce stuff. So they had this very big like office space that they had to fill up. So what they did was they made it this sort of open office for startups with preference and deference to crypto projects. So if you guys could set up right in there and you would get a couple of desks, right? And then I set up in there after I left Polychain. I had like a row of desks, and Wire was there. Richard Lee from 4K, he had Alpha Block, which was a fund at the time, was there. Multiplied was there. Future Swap was started out of there. Teller Finance was started out of there. Alchemy was started out of there, right? Like the Enterprise and Fura. I mean, there was a ton of projects that came out of Wire. They had a Wire podcast, which sort of like a who's who in the space, like went on there. Tolly, the founder of Near, Joe Lubin, like you name it. I don't know if Sam was doing FrxETH stuff then, but if he was, he definitely would have been on that podcast. It was just this hotbed. And SF Blockchain Week, you go, and it was just sort of like everybody was there. It was a who's who. It was honestly like a really cool time, even though like during the bear things were hard, much like it is right now. But we'd always we call them founders hours, right? Founders hours are when everybody goes home, right? Everybody wants to be the boss, but nobody wants to work founders hours. So it's like Friday night and it's like midnight and you're still grinding. And then, you got a call at 10 a.m. on Saturday. Oh, wait, it's the weekend. Well, it's founders hours, right?
Founders hours. Founders
right?
hours.
I like that.
Yep.
I like
Founders
that.
hours.
I work founder hours. Yeah.
So we're in there founders hours, and it's like work all the way through the week. Friday night, I got to stay late. 3 other people are staying late too. We're in separate conference rooms. We get dinner and a beer, and you're just shooting the shit, talking shop. And, it's really just such a very amazing and grateful thing to like sit down with people. And it's like, I'm talking to you guys. And I'm like, fuck, man, like, are we going to make it? And Dave's like, bro, what are you talking about? Like,
of course,
I'm doing this.
me.
Yeah. Like, I just interviewed XYZ on the podcast. Like, he was talking about this. And I'm like, oh shit, like that's dope. And then we like look it up and we feed off that energy. And it's just, it's so uplifting. And, I think right now, I was to one of your guys, Dave, Sam, I was like offering for him to come. It's our office here in Brickell. I've been trying to recreate, the space as we get more offices and have more room, because I want to get not just my team in here. I want to get some of the portfolio projects from Marin Digital in here, or people that aren't even just their friends, could come and just kick it and we just shoot the shit, talk shop, because, I think the one thing crypto is great about, it's a distributed team. You guys are distributed. My team is very distributed. But if getting in front of people and getting in the same room with people, like we can feed off of each other. And I feel like right now we need that more than anything, So it was very similar to that in SF at the time, like 10x, right? Like it just was, everybody was there. It was amazing. So
there's definitely magic happens when people come together and can just bounce ideas off in person and just so quickly and iteratively, and just like being in person, it's just a different energy than being on screen. Like if I could, I would love to do more in-person podcasts, like do these Flywheel interviews, which actually is a good idea, but thinking about that for another time, that'd be really cool. But magic happens in person. And so, but COVID, like that was a sharp break. It was a sharp break in a lot of things and in a lot of ways, and especially for the SF crypto scene, because you had that narrative of everyone moving out of SF during COVID,
Mm-hmm.
Yeah.
and stuff. And so like, so let's get to that part. So like, once like COVID hit, what was it like for your practice? Was it growing at all? Like, how was it growing? What were you focusing on, and who were your clients at that time?
Sure. Yeah. COVID was like a pretty interesting time, right? Because on the one hand, in SF, it got really, and this is just my opinion, but it got really ugly. You know, it was, people were afraid. I still remember I lived in Haight-Ashbury, like right outside of Golden Gate Park. And I remember, you know, a month or two after COVID. So we kind of know what it is. We're still scared. Everything's locked down, but, you know, it's not the Black Plague, but it's kind of scary, right? I'm walking in Golden Gate Park. I have my mask down just because I have a coffee, right? So I pull my mask down and I just sip the coffee in Golden Gate Park, right? I'm not in a movie theater or in a elevator with 10 other people, you know, and I sip and cough. I just took a sip.
Yeah.
I started putting my mask off. And I still remember this lady with like her husband or boyfriend yelled at me across the park and was like, "Thanks for contributing to the spread." And I was like, "What?" I was like, "What the fuck?" And the guy turned around and was like, "Fuck you," like just went off. And I was like, "Yo, man, all right." Yo, I put my mask on. He won that one because I couldn't get it. Right.
Wow. Yeah.
And it was just like that, dealing with, you know, I think all of us work in tech, right? COVID hurt things, but we still like worked, right? But I had roommates in San Francisco that were like in the restaurant industry. So it was like, I would come home and it would be like, you know, hot boy summer, right? And they're like slamming White Claws in their underwear and they're like, "Oh, what's up, Ryon? Like, you slanging some more BTC bags?" And I'm like, "Oh my God, man." You know, I sit here doing this crazy stuff and I come home and these guys are, you know, playing Journey and, you know, slamming White Claws and trying to get me to have two before I can get to my which is cool.
Hold on.
Yeah. Oh, it's
but
so
I'm like,
good.
the world's going upside down and these guys are just like, you know, it's the end of the world as we know it, right? Like, just like, it's okay.
Yeah.
It's blowing up. So it was really just sort of a crazy time. But in crypto, I think everybody had more time to sit down and pay attention to what was going on in the internet, what was going on with crypto. You know, I think we got a decent amount of new retail adoption. Plus, you know, everybody has their sort of like predictions and how they think what causes the next bull. And I do think the block reward happening with Bitcoin is a bit of a factor, whatever, right? But, you know, crypto started to take off. We started to grow, like not significantly, but like it was a nice clip. Now, when the bull fully took off, that's when we expanded a ton, right? We've grown a lot. And yeah. But I mean, during COVID, I think it was a very good time, right? Despite it being like kind of like a bad time personally for just the world, right? Yeah.
So Ryan, I got a quick question about like during the bear versus comparing that to the bull. What were the type of issues that founders was very common in a bear, and which issues were very common in the bull?
Sure.
Question.
Yeah, good question. Well, and I think it's relevant right now, right? Because okay, in the bull, my practice would be like this. So, you know, we do a lot of token offerings, we do a lot of legal opinions, but you know, we do a lot of fundraising. Then we stay on as company counsel. We handle just anything, you know, normal contracts, exchange listing agreements, any dispute stuff. We're well equipped now. But to your question, during the bull, right? It's like, hey, we'll get referred somebody. We work very closely with a lot of funds like Joe Mechanic, Symmetric, PIF, right? Pay It Forward Fund. Your guys, which you know, Omar and Wright are the shit. Much respect.
Yep.
Facts, real facts. Anagram, which is like Lily Lou. We work closely with Solana Ventures, Lattice, which they're based in SF, Infinite Capital. We work with a lot of funds, and it also helps me also having my own sort of prop fund, right? But in the bull, we get these referrals. You know, Framework would give us one, and they talk to the founder, and they'd be like, "Hey, you know, how fast can you spin up an entity? Like, I'm 3x oversubscribed." And I'm like, "Wait, wait a minute, how are you 3x oversubbed? You have no entity. And it's like, well, I have a signed term sheet here. Well, who signed it? Oh, me personally. No. Oh my God. Why would you do that? You know,
No.
it's just a term sheet.
No,
Sure,
what are you doing?
it's just like, you know, it's already a bad omen, right? So in the bull, like what happens? We have VCs deploying a lot of capital. It's very easy to raise. Founders are, you know, typically it's their first time raising, maybe their second as they transition to crypto from like TriFi or just traditional startups. But a lot more often than not, it's a younger founder that is sort of like seeing these bright lights of all these VCs, loving them, hearing millions of dollars being invested when they've never even seen like $1 million. I get it. I totally get it. But they'll come in and it's sort of like similar to what I did with MyEtherWallet, my crypto, they have a little bit of fake it till they can make it. But then it's also like their perception of their relationship with the VC can get in front of the relationship they'll have with me or the firm, right? Because we're there to help you. Like I can go into this a bit later, like what makes our firm different than any other firm, which is we know how to wear a lot of different hats. We can wear a VC hat, we can wear a developer hat. Like you gotta know the tech, right, to be a true crypto native lawyer. Like it's a lot of things. But you know, they'll come in and they'll think, you know, XYZ VC is their best friend. Hey, they like you a lot. Hey, they want to support you. But at the end of the day, they're money motivated, right? And our job is to make sure you understand everything. So rushing us to get something spun up, rushing us to just say, okay, here's the doc and I haven't explained it to you, can lead to problems down the line, right? So those are a lot of the issues in the bull. In the bear, it's a little trickier, right? It's, well, in this context with like FTX blowing up, we've seen a lot of retrading, right? So I signed with you guys, I signed with Dave, right? I'm going to invest at 40 mil val. FTX blow up, I signed it, remember, right? In the example. So I signed a legal agreement. FTX blows up, I come back to Dave and I go, Dave, you know, we don't have any money. So we'd still like to invest, but 20 mil val. And you're like, wait, what? You know, and sure, what can Dave do? Dave could sue them, sure, right? What happens if you sue that VC? Let's say they're a known VC. Well, you probably won't raise in the space ever again, right? So what happens? You either eat the 20 mil cut, right, from a 40 mil val to a 20 mil val, or you just go, let me think about it. No, like I'm going to let you go, right? But for the VC, it's sort of a win-win. They either say, I don't want this at 40, I want it at 20, right? And you say, okay, yeah, and you got to get fucked, right? Especially because that conversation will usually be with your lead, right? So that's the anchor. It's not with the follow-ons. Follow-ons don't really have that much control. It's with the big one. But we've seen that. That's kind of messed up, right?
Yeah.
Something else that comes up a lot, especially this season during the bear is, so for context, projects used to raise a lot with SAFs, right? Simple agreement for future tokens. Well, this whole thing is up for debate. I personally think SAFs sort of solve this problem nicely of you give me money for tokens, I give you tokens, and we're done, right? What we're seeing a lot of now are safe with token warrants, right? So you get equity in this company, but your tokens, which are issued offshore, those come through this token warrant. Now, as a simple example, if you have a blockchain project, let's say, you know, XYZ blockchain project. All right, here's your whole network, right? As a general principle, how much of a network do you usually have, a decentralized network, right? Do you have to give to the community, right?
Over 50?
50%. Yeah.
Yeah.
50 over 50, right? So at least 50. So I only have half a circle. So if this half circle is what the founders can give away, right, through this equity raise,
right?
Well, so for every 1% of equity, that's 0.5% of the network, right? So if I have, you know, because it's half, right? So two halves equal one. So I'd have to own 2% equity. That would give me 1% of the network. What some VCs will do is they'll do this one-to-one thing, right? Where it's like, if I've got 1% equity, I got 1% of the network. But what it does, as you can see, right, it's you do a couple of rounds and now you're about to launch and you're like, oh, we only have 37% of the network to give away to the community. They might break the protocol. Sure, you can go back to the VC and go, hey, look, like we need to fix this because, you know, we're not going to be able to launch. You're going to lose all your money. they might agree, but the point is they're already in a much different place as far as leverage. They don't have to,
Yeah.
right? So, there's a lot of those things. Other issues, I don't know, there's a lot of just general founder issues, I think, bull or bear, that come up. We could talk about those, or,
I want to go back to DeFi Summer in 2020. And like, I know one of your first clients around that time was SNX. And I think it's really important to touch on like your story with them, because you basically helped write like the legal playbook for DeFi with like through SNX, and use that like model for everybody else you worked with after, like Olympus and what else. So like, can we like touch on that? Like, how did you start working with SNX? Like, what did you do with them specifically? And like, how did that like, how did that play into like how you represented other DeFi projects from there?
Sure. Yeah. So I was connected with SNX through Joe Buttram.
Shout out Joe.
Shout out Joe. Doing his thing. The OG.
The OG.
Joe had gone into Haven. They were Haven at the time, like pretty heavily. And I don't know if you guys know this, but as context, they launched. They're doing okay. Then they dumped very bad, right? They went very, very low. And then they had this sort of like meteoric, come from behind, pump, which was great because they were doing like some really interesting stuff. And I mean, I think a lot of that really was the team, was Kane, was Jordan, was JJ. These guys were just relentless. And I think they're fighters. They were fighters, man. And
we got to get them on the pod, like Joe and Kane, like to go over this story, because it's insane. Like where they were, where they like started, like, and then where they were at like the most bottom of the bottom, and then like where they went to. It's just such a 180. I'd like, we'll convince Joe and Kane.
Yeah. You should. That would be great to have them on the podcast, man. That would be awesome. But yeah, it was really that they were going through a rebrand. Kane was thinking very like deeply about what is decentralization, what does it mean, and it was working with them was actually like a very big moment on the firm, because from the work we did with SNX, to your point, we carried it through into a lot of our other advisement on how to make projects more decentralized. Like, what does it really mean? And working with Kane forced me to just think abstractly, which might seem obvious to most people, but for lawyers, it's very hard for them to go, okay, what's the whole point? Like, what's the point behind the securities laws, right? Securities laws are about protection. Well, how do they affect that? Well, one of the ways they do it is through disclosure, is through restricting the assets. And I can't go, hey, Dave, buy this for me real quick. It's going to go up to 100x. You buy it and then I take off, right? So they have all these mechanisms, but one of the main purposes behind like the Securities Act, right? Again, it's protection. Well, who benefits, right? Who has the asymmetric information that can benefit them, greater than just retail? And it's usually the people that are in control of that security or in control of whatever it is, right? So taking away the control leads to a greater argument that this thing is not a security. It is decentralized. And Kane was very fundamental on just sort of like poking around and pushing on what was possible. Right. So initially we did some legal opinion for SNX around their token, around their governance, and really digging into it showed like going, DAO-first, which I think at this point, if you guys ever want to talk about like current regulation, I think the Oki DAO decision was massively overbroad and was like, regulation by enforcement, which is complete BS. Just as context with that, the other commissioner that wrote the dissent, like that's not normal, right? Like I think people, if they look at Supreme Court decisions, dissents are normal in the Supreme Court. An agency decision, it's not like that. They're not, that's not encouraged. Wow. It's not required. It's discouraged. So for somebody to say, hey, this is bullshit that works for the agency, I think that's saying something, right?
Yeah.
But
I have a conspiracy theory about that CFTC decision.
What's your theory?
I think SPF was influential behind the scenes, because he met with the CFTC and he was trying to get everybody on his front ends, and it would make sense for them to go after and like you said, the decision was such an outlier and so out there. Like what could have caused and motivated it? I have no evidence of this, but it's just like kind of just me
He dirty.
inferring, like, he had that picture with like the CFTC, and it's kind of like his look on his face and like stuff. I was like, he did something there, and like, but that's my conspiracy theory.
I could see that.
Yeah.
I don't know. It's very interesting to me that, I don't know if you guys saw on like Decrypt and CoinDesk, so like the DOJ is mulling criminal charges against Binance, and it's like,
yeah, that just came out this morning. I wanted to get into that.
It's like, what? I get it. I understand they're trying to lock stuff down, but like, why are you looking at CZ? Like, shouldn't you look at this U.S. person, SBF that just blew everything up? And instead you're trying to look at, I don't know, man, there's some madness going on in the space. I don't get it.
I know, it's just chaos, but let's get back on track. Okay. So like Kane, they were pushing forward, like what it means to be decentralized.
Yeah. So, and we, Kane like really challenged us and said, how can we make this, like, how can we make it more decentralized? How do we take control like fundamentally away from us? And it was like, well, it was little things, right? It's like, you shouldn't have a centralized email. Like, that's why they have like SNX DAO, like at SNX DAO emails, right? Everything should be transparent on a forum, right? When it comes to certain DAO governance votes, right? Where you like Kane or Jordan or any of the core team can have like outsized sway, especially where it is some sort of economic decision where like maybe me as one of the core teams, I benefit from voting yes instead of no. Abstain, right? Let the protocol do what's best for them. Like, cool. Well, how are anybody going to say there's control? Like, just go quiet and abstain, right? And these are all, advisement and like best practices. That doesn't mean that it's always been followed.
The email thing I never thought of. That's so true.
Like,
have a different email. Yeah, that's like simple stuff. I would never thought of that, to be honest.
Yeah,
that's a good point.
No Slack. Yeah, in the forum.
Yeah.
And if you want to take it off there and just put it in Discord, that's also something else. But at least it's all there. It's not siloed. Maybe you siloed some of the most sensitive information, right? Which obviously makes sense. But I think SNX is really still, even now, we're doing some sort of updating and upgrading work with them. They've always been the forefront of this stuff, and yeah, it's been a real pleasure to work with them.
Yeah, no, and going on to the point, like, security is like what makes a security? It's group having asymmetrical information, like what is public, how it's marketed and this and that. And I think like what makes tokens not securities is the fact like so much information is public. You can see the discussions on the forum, you can see them online, you can see like on chain like who has what's going on. So it makes like tokens like a lot different in character than traditional securities. Is that like
Definitely.
a right inference? So,
well, I mean, I'll say this, like, I think it's going to be a little bit of time before we get some positive or clarifying regulation. And, so now the game is you do, a safe and token warrant, you have your token locked, you want to at least have it locked for a year. Again, none of this is legal or financial advice, but, in general, you'll have some sort of lock on your token. You do the minting offshore, right? Where it's been well received and sort of putting a little bit of space, and have your utility ready, have governance as ready as possible if you can. Remember, governance doesn't mean it has to be this fully built out proprietary system or even using like Snapshot. You can start governance in Discord. It's about control. Like true decentralized governance is about control, where it's not theater, right? You're turning over control reasonably to your community. Right. And reasonably means you don't want to give over upgrade authority, right? Right out of the gate. You would do that slowly with some sort of trusted, like development committee, like dev committee that, votes on upgrades and everything. And, over time you can give it over. But, I think that's the process now. The SBF, debacle has definitely slowed up how, accepting people will be of crypto in the space. But in my opinion, right, it's nothing new, right? It's this cycle's big problem.
Oh,
and,
right.
Be what it is, right? Yeah. Like, remember Telegram was this huge, big, oh my God, Telegram's getting sued, and the ton token. And then there was some like dicta in precedent that said like, oh, anybody that participates in maybe reselling it would be an underwriter. And it was like, oh, this is going to blow up the whole, crypto investment community. But what a lot of lawyers were saying that this, it would affect it in this way, then that would also apply to traditional VC investing, and no VCs would be able to resell their equity positions. There's this argument floating around, which I thought was completely inaccurate, and it was, right. Point being, there's a lot of FUD out there, especially right now. Get back to fundamentals, get back to building,
Get back to fundamentals.
Yeah.
Get back to basics.
Get back to basics. Yeah. Quit
So
this shit or get out of here, man. Like, it's not going anywhere, right? So
yeah, no, for real. Like the innovation is going to keep on coming. And speaking of innovations, the legal structure, I've seen a lot of innovations through there too, utilizing a lot of offshore, whether it be BVI, whether it be Cayman, like, we have the operating company here, but
Or
the
Switzerland.
minting, entity there, and like, or, all over the, like, so my question is like, as an attorney and innovating in this space, do you actually fly out to say the BVI or Malta or any of these countries and talk to like the local legislation there and figure out a structure for your startups? Or how do these entities just kind of spring out of nowhere? And I feel like it's a trend too. Once one person starts doing it, like everybody starts copying this entity that works for now until the next one comes.
Yeah, sure. Good question. Well, lawyers, I tell my junior guys, they come in and they think like they're just going to like make a contract. Like you're just going to write it up and figure out the right way. No, it's none of that, right? Being a lawyer, especially like a corporate transaction lawyer, is a lot like being a developer, right? You have a code base, you pull the shit that works, you tweak the ones where you want to do something a little different, and that's it. I mean, it's the same thing. We have precedent, we tweak here, we give it to the client, they show it to the investor, they make notes, we update it, but it's really just a couple of places. So what does that mean? That means lawyers, we're always watching how people are raising, the structure they use, the structures they've used in the past. Have there been any issues? Have there been any issues, say even now versus when they did, because some time has passed. So there's been a lot of, fundraising with structures where they either start domestically with a BVI, to your point, Cayman BVI Foundation or a Swiss Foundation. Now, we were working very closely with some offshore firms and was giving them a lot of referrals. I think there are some really good offshore firms out there right now. I think in general, offshore firms, they move a little bit slower. They're just not like U.S. founders, U.S. lawyers. It's known that we work a lot. We work all the time. If you're a lawyer in the U.S., you work all the time. If you're a lawyer in BVI Cayman, you work sometimes. If you're a lawyer in Switzerland, you work once in a while, and hey, respect to all of them, right? But what we did was in BVI Cayman, I found one of like the best, there's like 4 or 5 big firms out there that are really doing a good job. I found their top guy and I got him to join. So, nice. A new rollout. Yeah. So we will have like Horizons Global. We already have the URL and all that, but that'll be fully rolled out by February 1. So for our projects, yeah. So, you come through, you raise with us, we'll kick you to our Cayman guy. He'll handle that piece, but it's a dedicated person just for projects that we work with in the space. He's not on a boat, he's doing this like directly with the team. His crypto knowledge will be significantly increased as a result. I have like a tokenomics framework seminar, like just that we sort of built in-house and, rolling out to my teams. Like lawyers aren't doing that anywhere else, right? Like we're doing that. Like a lot of lawyers in this space aren't trying to expand, their horizons, right? Pun intended. Right. But that's what I think makes us different. So we'll have this BVI Cayman branch. When I was in Breakpoint, Lisbon, I flew over to Zurich because I'm very close with like Ryan Zurrer with Dialectic, an LP, and like Lily Lee with Anagram. So I went over there to see them. Met with MME, which is sort of like the who's who Swiss firm, right? They did the Ethereum Foundation. Met with their new partner. They're trying to change up some things, and because they got a little bit of a bad rap because they helped the Ethereum Foundation sort of get spun up, and I think they took 40% of their fees in ETH at the pre-sale.
Whoa!
Yeah. or 30 or something like that, but they're chilling, man. They're chilling. So,
Print it.
yeah, it's really hard for them to work after that. So I get it. I get it. I totally get it.
That's why they goes to once in a while.
Yeah.
They hit the jackpot there.
Yeah. But rather than sort of just keep, which I have a good relationship with MME, any, projects you guys are talking to, if they need a referral to them, let me know. I'll give you a very good warm referral. But if it's not under my umbrella, I think we've just really done an excellent job of kind of changing the way you practice law, like the way you practice law in the space, the way you do this stuff is just a little different if you want to be like quote unquote crypto native, right? Yeah. It really is. Like you have to know how to do the docs. You have to know the newest trends. You have to be quick with like DAO decision. We were very much DAO-first, which is sort of, some people have been like, oh, why'd you do that? Look at DAO. And it's like, well, the government can do whatever they want. And just because they came out with this poor decision doesn't mean we were doing things the right way. However, now that they do have the decision, we kind of have to change our advisement, right? So you have to be very nimble. You have to get the technology. I always say like my team, they can wear a light developer's hat. They're not coding Rust or Solidity, but they can talk about how the smart contract functions. It's all very important too when it comes to decentralization, right? Yeah. There are also VCs, right? I encourage everybody in the team to get exposure to projects that from the MDV side we're investing in. I have a lot of like pretty cool ways to get them involved. But by doing that, by having skin in the game, it also changes everything. Like as a lawyer, I can tell you, right. I've worked on plenty of deals before I even did my first angel check, like a small little investment, like not even a 20K check, like a 5K check. I didn't get it until I eventually did that. I did my first deal. Then it all started to make a little more sense because, your incentives are aligned. Now you have skin in the game. You know what it looks like to sign one of these, agreements, to get your tokens. What do you do next? Like it's a whole thing that I think can't be replicated without going through these reps and doing these deals, And so much the same way, I want to bring that same sort of training and dedication with our new, offshore branch. And yeah, I think it's pretty exciting.
I think you made a really important point. Like, it's not just like, law offices that have to be, adjust and like more than just a law firm. It's like, you see that with VCs as well. You see that with like all kinds of different entities in the space. Like you don't just invest, but like you have, people help out with development, help out with business development, with all sorts of things. Like to be in crypto, you have to wear a lot of hats. That's just part of the job description because this field is just so new and there's so many different things. People just don't know what's going on, especially newer founders and newer participants. And so like, if you're able to, serve a lot of their needs, then like more people just keep coming back to you.
Totally. Yeah. And I think like I've seen a lot on, on CT. I've seen a lot when I've talked to other lawyers where they're like, oh, like crypto law is so cool. Like I want to get into it. I want to be a crypto lawyer. And it's like, hey, do you really want to? Like, do you really want to? Or are you just bullshitting because you see money here, right? Because to do it, like it's an obsession. Like I know you two guys are obsessed. Like I'm obsessed. A lot of ways unhealthy, right? And I'm not suggesting you need an unhealthy obsession, but like there's no way you could stay up with this space with a casual approach to understanding crypto. It's anything but fucking casual. Anything,
Facts.
And
Facts.
Right? How are you going to advise a project on decentralization when you have no clue when they're, a cross-chain vault using a curve gauge mechanism and like frax minimize governments? You're like, yeah. Like most people will be like, huh? But that's like that, we've all heard about projects doing something similar, right? Like, oh, okay. So I do think that while from the outside looking in, or when you're first like dipping your feet in the water, things look pretty cool, right? Big money deals, crazy stuff, but really working in it and understanding and having the ability to care about, what could happen. Again, we did a lot of DAO-first advisement that we've had to pivot on a lot of it because there's an enforcement action. There's this, CFTC action. We are not the government, and we're not going to try to fight the government. We are just going to try to help our projects not have to deal with them and just continue to build and, change the world. So,
I want to get back to like this cycle, like after SNX, you're trying to get new projects. Do you have any more wartime stories from this past bull cycle?
Yeah. So I had, how do I say this? This is a little tricky one. Okay. I had I had a very well-known protocol, right, terminate one of their early core team members, like number 4 or something, let's say. And I'm going to mix up some of these numbers, but like the general theme will be the same, right? So maybe he was a little bit, maybe he's number 3, maybe he's number 5, but you know, he was an early founder. They terminate him for lots of reasons. Just wasn't a good fit. Like really, just wasn't, you know, wasn't jiving with the rest of the team. Tries to sue us. Before they told me that, you know, we got a demand letter, they made him this offer of a couple million tokens, right? And I said, okay, I think we shouldn't do that. You know, let's try to get like a cash deal. Anyway, long story short, this founder comes in, alleges everything. I still remember one of the funniest allegations was alopecia. Alopecia is like balding.
Oh, yeah.
Like, yeah. You know, so it's like, oh, they fired me because I was going bald. I didn't like I was losing my hair. We go to, so, you know, we're negotiating with the attorneys and we settle on a mediation. That's where we finally settled. It was in this mediation. We go to the mediation and the principal from the company, right? The company person that's there with me to do this negotiation is bald. Like, is like a 30-year-old guy that's lost all his fucking hair. Like he had no hair. Like this guy has some of his hair. My client has 0 hair, you know, and we're like talking to the mediator and it's like, and he's an ex-retired like federal judge. It's like, judge, like, look, this is my client. Like, this is kind of crazy, right? Anyway, we go back and forth. We convince them that like the project is not doing that well. He shouldn't take the tokens. He eventually ends up settling for like 80K, 100 something K. But the token value at the height of the last bull was about 90, 100 mil. Ouch.
Wow.
Yeah. I was like, yo, man, I need a bonus for that or something. But, you know, next time.
Wow.
Yeah. That's one story. Another wartime story. And this is actually, I think, a good lesson for founders. Founders, when you first get in the game, I do think it's important, you know, you need a little bit of capital. Have a little bit of capital before you start something because it could save you tons of time, lessons, money, everything to just get a decent lawyer up front. And like, you know, for your listeners, for us, we'll sometimes do some basic work with projects up front until they raise, and then we'll turn on the fees, right? Not all firms will do that. And it is case by case, especially now, right? When things are crazy. But this is a great example of that, right? We had 2 founders related, okay? One is a young founder, he's the CEO. One is an old founder, and he's like CFO, right? Old founder and young founder are related. They're like 4th cousins or something like that, but they know each other, right? They're family. CFO, older founder makes younger founder sign this proxy, right? And a proxy, I don't know if you guys know what a proxy is, but like a proxy contract could say, hey, listen, on voting matters, I'm going to give you some of my power. So in voting matters, Dave, even though I'm CEO and you are CFO, when it comes to board decisions, we're the same, right? Even though I have 60% and you have 30%, voting, we're equal. Now, what older founder did was in this proxy, that's what the proxy said. It said, when it comes to board matters, board of director matters, we're both directors and we're both shareholders. I have the same shareholder voting power as you, even though you have more equity. Okay. What older founder did was he put in the contract, in the proxy contract, this math. And it was like, okay, Dave, you have, you know, XYZ shares, you know, 15,758 shares. I have, you know, 60 million. Here's the math. And it was very like complicated math. What he did was if you did the math, which it never showed totals, it said, here's the math. Therefore, you know, that's how the power will be assigned with shares. He assigned, the older founder assigned 4 phantom shares to himself. So let's say it's 10 million, right? So 10 million, I have 6 million, I have 60%, right? Dave has 4 million, 40%, but with voting 50-50, but with voting, I'd have 50 and Dave would have 50 and 4 shares. So 5 million and 4 shares, in other words, right? That's fraud. That's fraud. So like he does this, he signs the proxy. We're like working with them. They're having problems. We're trying to get the other founder out. He exercises his right to the proxy, tries to lock down the money. I run to the bank. I go to like, Chase, right? Chase Bank. And I'm like, hey, XYZ bank accounts here. If you give them any of that money, what's your name? Oh, your name's Kit? Okay. Kit, good. All right, I just sent an email to my team. You give him any of that money, I'm going to sue you. I'm going to sue Chase and I'm going to sue you. Right? Now, I'm not that guy. Like, just so you guys know, I'm not like running in, kicking open doors, like, I'm going to sue you. Like, that's the worst thing you could do. You never do that. Like, that's just like poking the bear and saying, let's fight. Right? Because I'm not actually going to fight with that guy. He's going to get his team. He's going to come get me. But, I didn't want him to give the money to the older founder because he was trying to take that money and lock it up and keep it his own. So I threatened him, finally got control of the money, show him the fraudulent proxy, gave him a little description, do the math, just do the math, look at it. Eventually got the money out, stuck it in with like a neobank I was working with, which is also crazy, right? It's like another good reason to work with a good lawyer. It's like who you know, right? Stuck it in there where he would be safe, turned around, we filed a lawsuit, they did a countersue. Anyway, long story short, they split. Older founder had a decent chunk of the tokens. Younger founder was sort of like stuck with this burden, which they're still sort of sorting out, right? All that though, as like a terrible story, cost about $500,000 in all in fees, costs, everything. Yeah, not just like legal fees, just other stuff he had to pay him, all because he signed this stuff and didn't have a lawyer look at it, right? Like that's an extreme example, but I mean, there's a ton of these.
What's the point of signing like a proxy contract to begin with? Like, why would I want to do that?
Never. So yeah, just for anybody listening, do not sign a proxy contract.
Okay, there you go. Easy.
If there's a reason that sounds good to you, please have a lawyer that doesn't work for the person that wants you to sign that proxy. Look at it, meaning get a different lawyer. In this case, it was like younger founder was very young, right? And older founder had run several businesses. So in this scenario, he was like, look, like you just got out of college. I've had 6 businesses. They've done well, I should have equal voting power. I'm dedicating this. I'm, twice your age. So he kind of just like fan bullied him. Right. So you should never do it. Yeah. But I mean, here are other things why I think you should also have a lawyer like earlier with founders are things like taxes, right? Like getting your 83B sorted out, like making sure you have proper tax strategy when it comes to these tokens. What else? Like, again, VCs, like you were talking to a VC and you're already pumped up. You're like, we're good to go. The VC told me the terms, then you talk to me and you're like, here are the terms. And I'm like, cool. Hey, Kit, like, remember 1-to-1 safe and equity. This is going to be a problem. And you're like, can you do this? Like, I need you to just do this, Yeah, I could, but do you understand the problem? I don't care. It's, it's XYZ. It's like, it's a great fund. Like they got my back. Well, maybe,
maybe.
There's maybe, right? There's a ton of those. So
if you were to say, obviously not naming names, but like out of all the fundraising deals you've seen, how many of them are actually predatorial and that a founder should double check?
I'll say some of these big tier 1 funds, there are definitely a few that are like excellent, right? And I think they do a good job. I think it's always hard to sort of slight a fund for doing what they're supposed to do, right? Which is they have to make money for their LPs. How it's done, it takes different flavors, right? Like I always say this with other firms. With my law firm, we have a good mix now of younger crypto native lawyers that like, 2 of them now have only been in the space. They haven't practiced any other law and they're super legit. But now we also have a mix with some big firm lawyers, right? And we recently brought in Advanced Blockchains GC, Dave Kaplan. It's another hitter, but Alone is from Gibson Dunn. We've had people from McDermott there. We have a great mix. Now, I always say again about big firms, there's good lawyers there, but it really it matters the team. I think it's also similar with VCs, right? It's like you're talking to a big fund, they might have 2 different teams. One of them might be okay, and the other one, that analyst or that venture partner is trying, he's trying to make some extra scratch for himself, and he doesn't care, about like being a little bit rough with you guys because he's with XYZ fund, right? So, I guess the point is it really is who you get. But as a general proposition, I think just founders, again, should just get a decent lawyer, get one that's in the space or at least knows the space, and know some of the main participants, right? Like some of these big firms may be great, but if they don't know how, Framework does stuff, what good are they, right? At least with that situation. But yeah.
Yeah, got it. No, yeah, it's interesting. Like, I guess another advice. So, if I'm a founder raising money, like, what should I look for in a VC? You think?
Sure. I think founders. Well, also I think the time speaks to that, right? I think right now for some founders, just getting that raise would be enough.
Yeah.
Like it's messed up to see last bull. It would be like, hey, 3x oversubbed, got to get this thing closed in a week. No diligence. No, I saw some projects raising at 80 mil first round. I look at their deck. There's like spelling errors in their deck, poor graphics. And they're like, oh yeah, we're dev guys. We're like Rust developers. We don't know how to make a deck. We just got done working at Jump, 80 mil, 3x over something. Like, what? Now it's like, hey, 15, 10, 20, whatever it is, 30, they're just trying to raise. If you can, right? If you're a founder and it's a perfect world, you would want a fund that would dedicate capital that maybe a founder could work in, let's say a soft hook or two. So, MDV, for example, we're very close with, I don't know, asymmetric, right? And so part of my investment, I also, you give me a soft ask, connect me with Joe Asymmetric because they're doing some cool, dashboard for this and this, right? And you want to like integrate with them, or in other words,
what does soft hook mean? Like
soft hook means it's not written in a contract and it's not a condition to investment, because no VCs will do that. It's like, no, fuck that. But looking for VCs that could be value add, that you have. And another trick I think for founders is a specific ask, right? Instead of like, cool, okay, you like ask founders, like you talk to Chris Dixon, right? You talk to Chris Dixon at A16. Let's say he's super down for you. Like, what would you ask him if he just would give you more than capital? What else? And sometimes founders will be like, I don't know, connect me to other funds or connect me to projects that'll help mine. No, man, I think you should have a list of asks, right?
Yeah.
And why this ask will build your project and why it's that important. And like each VC can give you something different, right? So, but again, it's sort of like, look, I'd love for you to invest. I think part of, you coming in as a partner with my project is sort of this collaborative situation. And I would really love it if you, Dave, let's say you're the VC, you could connect me with Omar at PIF or, Sam from Frax, because, I love the way it, it has the stablecoin balancing mechanism. I need to talk to him a little about that. Would you mind, And it's like, again, the cool thing about the space right now is how many real deep participants are in here? Like, what do you guys think is a number? Like how many? Like deep crypto people in the world, like dedicated to this game.
I'd say probably like a few thousand.
I would say around the 30K, maybe.
No,
30K, I would feel.
Less, right?
Less. What do you think? How many do you think are?
I think 50,000, maybe 100,000 if you start trimming at the non super deep crypto people, the people that are in it, but they're not like digging into these protocols and emissions and all this stuff, right? But like they get it, maybe 100, but like to your point, 30, 40. How many deep crypto? Maybe 5,000, right? Like a SAM level, even less. But the cool thing is, it's like, well, if I did a deal with Dave can get me in front of Sam right now, right? Same with you, right? Like most of us can get us in front of somebody if it's that important. And that is like major alpha, right? I think that's lost, like not lost on all founders. There's definitely founders that are always just grinding and trying to get in front of the right people. But like this idea, if you were a SaaS company, right? It's a different market. It's a different game fundamentally, right? Here, like you could be a hustler, build stuff, go over here. Like this is also why I think there's some burnout in this space, because, it's all right there. You just got to kind of go for it and build it, which is, I think, what's so awesome about this space. Why I'm so grateful to be a part of this space, So
yeah, absolutely.
Have some hooks there. Have some real specific ways they can help you, because I do this all the time when we go on like portfolio company like follow-up calls, like me, and it'll be Winston Dave, right? Because he's my venture partner. We'll go on there and it's like, how can we help? You know, and they go, recruiting. We go, okay, we try. There's always recruiting need, right? But then it's like, what else? You know, these projects could come to me and say, hey, look, you know, sure, no, you know, we don't want to pay for it. Maybe you can just give off the cuff, non-legal advice, but your thoughts on this, or your thoughts on that. Sure, I can give them that, you know, connect me to this fund. Sure, right? Like anytime there's a specific ask, it'll get executed. And I think founders should just see, again, choose VCs that'll help. Some of the bigger funds will help you if they think you're going to change the world. Some of these still tier one, but smaller funds will give you a lot more help. And angels and, you know, sort of early stage funds are typically the most helpful, right? Because you have to just, as context, this is where they're at. They're trying to get up there to the 16. So they have more time, right? So I think that's another thing founders should think about when they're raising is, A16 is great. Paradigm's great. You know, if they're going to give you some big, heavy resource, then do it. But if they're just giving you capital and you can get capital from a lot of other like tier 1 A+ players that just aren't that big, I would take those other ones, especially for earlier round, because you need it takes a village, right? It takes a tribe.
So, yeah.
I want to flip.
So Ryon, same question.
Oh, I was gonna.
I just want to add really quick. It's the same thought.
Yeah.
It's like, so what advice would you give to founders, and what specific questions to ask when they're shopping for an attorney and for counsel?
Sure. Well,
right. This is your field.
Yeah.
So yeah.
So I would say this. I would founders should ask what kind of deals the attorney has participated in. I always say, okay. So again, remember I told the MyEtherWallet story, and I said I had this injury. So I used to do MMA, right? Mixed martial arts. I still, you know, work out, just stay in shape, but I'm not doing anything crazy. I always say in MMA, in jiu-jitsu, right? You could sit down with somebody and they could say, yo, I'm NCAA wrestler. I tapped everybody. I'm a killer. This. And, you know, he's got veins coming out here and tattoos all over his face, right? None of it really matters. Once you slap hands and he grabs me, I could tell in a second if he's good or not. And it's usually those guys that are fucking stone cold savages are the worst, right? Similarly, I think that applies in crypto, right? So founders should go, hey, you know, Ryon, like we're looking to raise. We need help with decentralization. We'll need a legal opinion. You know, here's our deck. What do you think, right? Test the lawyer. What do they think about the project? What do I think about your governance? What do I think about your tokenomics, right? What do I think about, you know, how the protocol is put together on, you know, again, on a very low level, right? Just because I just saw it, let's say. But I would test them. A lot of times founders will go and it's like, oh, it's a good one. Like, oh, it's a big firm. They're great. Well, test their lawyers, test their crypto group. So what have you worked on? You know, oh, I worked tangentially on this, and this with this project. What project? What I see a lot with big firms is they'll work on projects and they're either projects that are, you know, have some big corporate backing. So they have to go with a good one, right? But it's not a good project, right? Or like by testing them, you could see like how much time will it take to get these attorneys up to speed. So another thing we see with big firms is they'll bill. They'll go, oh, okay, you're a privacy DEX. You're a DEX that use ZK technology, you know, to engage in trades. But you could do that so, you know, the trades are private, so your wallet's private, whatever it is. We'll see a ton of attorneys bill for the research. So I'll bill you 8 hours so I can read about ZK technology. Like that's bullshit. You know, that's not fair. You know, so by testing who you may work with and seeing who they work with and, you know, check your references, I think you have a much better probability of getting a great attorney.
Yeah. I wanted to flip the first question to how can VCs prove themselves to founders? How can VCs make their way up from just, you know, early stage starting out like mid-tier to top of the pack?
Yeah. Good question. So so I've sort of engaged in that whole, you know, journey myself, right? Where first it was like just doing legal stuff and, you know, did some angel checks. It worked out, like, you know, general counsel at Solana, that did great. Now I'm kind of sad, but, you know, it'll come back, right? Bullish on everything in space. Definitely come back. When you start out though, you know, you could start out doing angel checks and really being that sort of VC that angel that is always there. You know, we see this a lot. There's a lot of like very strong. Mark Kadakowski, he was on the board of My Crypto with me. He helped with FutureSwap. He's doing this ETHOS operating system. This guy will think of the idea. He'll help fund it. He finds the team. He stays working with the team for free, you know, and he is just dedicated as dedicated can be. And he's a mentor to me, right? He's always thinking about how you can give back and how you can contribute. And I think for VCs, you know, going that little bit of extra mile where it's like, okay, Dave, you know, you raise, I give you some money. You're like, hey, connect me with, you know, Raj and Toli, I connect you guys. Or like, do this thing over here, I connect you guys. But if me, Ryon, I'm sitting around at Christmas and I'm messing around on crypto Twitter and I see you just rolled this new thing out and you haven't even prompted me for anything, right? I reach out to you and I go, yo, Dave, I just see your V2 roll out. You know, you're doing this and this with like cross liquidity pools or whatever it is. You should talk to these guys. Can I connect you? You know, just sort of reaching out. And again, this isn't like every day or once a week or once a month. It's just like when it comes up, this simple act of you going, hey, look, he didn't ask me for anything, but I was thinking about you and let me help you with this. Like, it's huge. It's huge. It's very much the same thing how like you'd want to treat people that you want to keep a good relationship with, right? There's a lot of just relationship dynamics that go into being a proper VC. And I think for those VCs that don't do that well, they sort of lost that understanding. And they're like, oh, you know, we're known. We're a big pot of money. You know, you're lucky that we're investing in you. Shut up. Yeah. You know, take our money and then we'll dump your bags. It's like, you know, and it also, again, goes back to that mission. Like, what are you here for? Are you just trying to make like lots of money and then exit? Or you know, do you want this space to be here forever? And you say, hey, I played a part in it. That's my mission.
Being proactive, basically.
Yeah.
Acting even when you're not asked to. And also, I think one of my favorite quotes is from our friend Joe. He was like, the number one like referral for like raises for like to VCs from founders or like from other founders themselves. Like other founders talk to each other like, hey, like how's this VC? How's that VC? So they'll talk and they'll tell you like which VCs actually have their neck out for you and which VCs are more kind of just laying back in their chair and just chilling.
Yep. And there's always exceptions, right? There's always the founders that think they're like the next Zuck or the next Vitalik, you know, and they're like, man, I'm the shit. Okay, well, maybe you are. Maybe we shouldn't work together because I'm just, you know, trying to help good people and just not legit enough for you, right? But most often those guys don't last that long, right? So, you know, also have to be aware of those types of participants, right, in the space.
Yeah. You said you're the general counsel for Solana. Can we get into that? Like, when were you the general counsel of Solana? How did you become that? And like, what was it like seeing Solana just rise to become like, you know, one of the most competitive L1s this cycle?
Yeah. Started working with Solana in 2018. Was referred them from another founder, which was great. They were working with Wilson Sonsini. Yeah. But, hey, to your point, founder referrals for lawyers and VCs, man, it's really the key, the key to the stack. Was referred them. They were working with Wilson Sonsini. I was only 2 lawyers at the time. Raj gave me this sort of like test contract. It was like not a normal contract, which I just had. It was bespoke. I had to build it. Wasn't that hard. He liked us. Brought us in. We started working with him in 2018. Had an office there and at Wire. Remember I was saying the whole Wire story? So I had 2 offices. So I'd go to Wire and then I had a little scooter and I would take my scooter down to 645 Howard, which is the Solana HQ at the time. Was very cool working with them, like as they built stuff, as they dealt with, you know, problems and had to pivot, right? This was, remember, like for context, EOS raised, there was these other L1s, it was like Neo, and it was like, oh, these guys, Solana is going to be another EOS maybe. And it's like, no, they have some real stuff here, but nobody was buying it at the time. So, you know, we had to raise again. We had to pivot on some of our like hardware validation stuff. There was lots of just things that we had to push through. I still remember I said, you know, San Francisco Blockchain Week was this awesome thing. I was talking with one of the team members, the core team members in Lisbon, and they were like, yo, remember SF Blockchain Week? They had this mimosa like breakfast, right? At a decent time. Nobody came. And it was just like, shit, you know?
Wow.
Yeah, there was like nobody there. We really went through a lot of ups and downs. Like at first, because the team is like a telecom background, it's like, oh, cool, maybe we'll do some telecom stuff, like Qualcomm will come in or whatever. And it's like, I don't know, like, oh, I hope not. Like, what's the use case there? So there was there was really a lot of like struggles and challenges to get around. And we started looking more and more at DeFi. I think that was really the saving grace, right? But it was a trip because, Solana launched in like March, I think it was March or April. It was like after COVID, April or May, and started off okay, and then it really started taking off. Again, a lot of that SBC stuff, SBF deals were also sort of commingled. They were very like, FTX was very close with Solana, which for me was kind of a trip now because I did those deals. Kind of crazy, kind of scary. But, and in a lot of ways, I also think FTX with their DeFi focus kind of pushed Solana in that direction. And, I think while it's fucked it up, it definitely had value add at certain periods.
Yeah, the silver lining in it all. Yeah.
Yeah.
Well,
Like we could have just been this, it could have been like, just some other zombie chain L1, right?
Yeah. Because, they came out in the generation L1s of EOS and Neo and Icon and all that shit. And like, back then I was like on EOS from my first project and everybody just had EOS exhaustion. Like, they raised like $4 billion, like not much to show for it. The pitch of Solana and the pitch of EOS were quite similar. And like no one basically went around to do their due diligence on Solana. So do you think like when SBF and FTX like got into like, hey, we're going to like do major focus on Solana, do you think they saw the tech, or do you think like, oh, like we can have like be masters of the universe on Solana, like this is gonna be like our chain? Was it more like there's something here, or like we can control it?
Yeah, good question. I do think whether SBF thought about any sort of control, that wasn't apparent to me. I do think he believed in the tech though, and say what you will, right? Like people hate on Solana, no problem. I think the cool thing with crypto is you don't have to engage with any of these protocols if you don't want to. But Solana has gone down, but like the tech works, right? The infrastructure works. And it's a new technology. It's a new L1 that does stuff a little differently than ETH does, a different language. So, there'll be challenges. But as a threshold matter, the stuff works, and they can do a lot of transactions. And they have this Fire Dancer, rollout, which is this upgrade, which should really juice up the transactions even more. It does really work. Totally did have something, and he does have something, and he continues to, And I think SBF saw that, and maybe he said, yeah, I could take like a major position in which to control, but I don't think Solana had anything to do with that.
Okay. Got it. Yeah, no, Solana's interesting because one of my like friends, at first I was like, oh, like Solana is just like another L1. And then like, I was definitely more like dogmatic, I guess, in the early days of this cycle. But I had like a friend that kind of like opened me up to Solana, and I'm just like, wait, there's definitely something here because it's different. They're carving their own path. Like they're different than all the other L1s. And also like right now, they're going through their dark time. Like, yeah, like, $250 to like whatever the price is now, $10, $20. But there's people sticking around. The developers are still there. They're still building. And that's the most important thing. Like every protocol, every chain goes through their dark time. ETH went through it twice, 3 times. Yeah. So like, this is like, it's the hard times that makes the foundation stronger for the chains. And that's why like I see Solana sticking around, and, I like to think positive sum, and like there'll be enough market share like going forward. Maybe Solana's more of like the NFT chain or like games and stuff like that, like runs through Solana because of the high transaction throughput, and maybe more of the financial stuff is on ETH because of the security and stuff. But so yeah, I don't know. What are your thoughts?
Yeah. I definitely think Solana will start to carve out its sort of own niche. I mean, I do think we'll have chains. Personally, I think the next bull we'll see sort of like the L2 wars.
The L2s, yeah.
We'll see. But to your point, we went to Lisbon, right? I mean, you were in Lisbon, and that breakpoint was very different from the breakpoint prior. The last breakpoint prior was like, this is cool, but it's very frothy, Like it was like, this has got to be top
It's
market.
like the
It's just,
top.
yeah, just a little too ridiculous. And it's like, this isn't sustainable. It's actually like a little concerning, right?
Mm-hmm.
This year we went, and it was so sad that the FTX debacle was right after Lisbon, because, you know, I went there with our team. We had a packed schedule with teams. We had so many things working, so many, you know, pots in the fryer, just trying to make some cool things happen, you know, to work with and to help build. You know, we're very much in the mission like that. This is going to be here forever. This space is going to be here forever. And if I have anything to do with it, it definitely will be, right? So to go from all of that hopium, all that cool stuff that we had, you know, built up for FTX to just blow it up, it was crazy, man. It was crazy.
Yeah.
But
Dude,
I get to your point, Dave. Like I was getting paid $80 ETH, right?
Yeah.
In 2018, 19, I was like, okay, for legal fees, I'll take ETH, but then I would still have to pay out my team, you know. So I was like, I don't have a ton of money right now, but yeah.
Oh, would you pay them in ETH, or would you sell it and pay them?
I would keep the ETH, and then any cash that would come in, I would pay my team.
Smart.
So I would, so I basically just, you know, that'd be cash that I couldn't spend, in other words.
Yeah. One of the things we were just in Lisbon like a month ago, and one of the things I'll never forget, I saw you at this one party. It was the FTX multi-coin. Like, only you can stop bear markets. Only you can stop bear markets, with like Smokey the Bear.
Oh yeah.
And I have a picture of that. I have a picture of like the projection of like that
the bear,
logo and poster. And like that was like right before everything collapsed. And I look at that, I was like, at that point, no one had like any idea. No one had a thought. It wasn't even considered. Like, it was just like, at that point, it's kind of like murmurs, and like, no, it's like, nah, like this is probably like just like some rumors of this and that. And I'll never forget. I was having, right when I left Lisbon, right before I was like leaving Lisbon, I was like having breakfast. I was with SatStart, and I asked, So I was with SatStart, and I asked him, hey, like, do you think FTX is insolvent? And he was like, I can't imagine it. Like, I doubt it. Like, it's hard because like people can't like imagine it until it actually happens. And I was like, you know, that's exactly what they said about Luna, like before that collapse.
Yeah.
Like, people just couldn't imagine it. And I was just like, you know, and I remember having breakfast with them, and we were kind of like talking, just like, you know, blah, blah, blah. And then I was off on the plane. And then I remember going online and seeing that Binance, you know, agreed to buy out FTX. And that was like the beginning of the end, and everything just kept unraveling from there. Like, this was at the point, like right before that, like, you know, Binance was like selling the FTT tokens, and like Caroline tweeted like, we'll gladly buy all of them for $22.
Right.
Which is like really interesting. It's like the opposite of like, you know, I'll buy all your Solana for $3, your SOL for $3 to go fuck off.
Yeah.
It was like the beginning. That was the beginning of it, and that was the end of it. Like, very. And so, I was just like, what was going on through your mind when the FTX collapse was happening? Like, what was like where were you? Like, what your thoughts were? Like, is this for real? Because like, you're a lawyer, you do all the due diligence. Like, did you feel like something was sketchy with like FTX, and like, or like, did they do a good job of hiding everything, and so it was like complete fraud?
Well, you know, I think they did a good job of hiding things. At least, you know, the deals we did, they were sort of like, it was like, we take Serum in exchange for Solana, right? So sort of like, we take yours, you take mine. There wasn't a ton of due diligence, because, you know, they were all like very basic tokens, and they wanted Serum, I think, to be built on Solana. There's some details I'm leaving out, but when FTX collapsed, I was flying from Lisbon to Zurich, and I landed Zurich with Derek, with one of my guys, and I'm just
Shout out Derek.
Shout out Derek. Yeah, we got some killers coming out. We got some real talented people coming out.
Yeah.
But I'm just sitting there, and I was like, is this serious? You know, like, I can't believe this. After Luna, after everything we went through, and this thing blows up, like crypto's golden boy. And it's just, I don't know, man.
Yeah.
Irony is such an interesting like narrative device, and to just kind of end it with SBF of this year, man. Yours
not over yet. Yours not over.
I know.
I know.
It's like Genesis blows up. It's like, oh man, of course.
Yeah. Oh yeah. What's your take on that? I honestly, like, I didn't understand the GPTC trade until I read Arthur Hayes's blog post about it. That was basically what drove last cycle, was that premium.
Really?
And then like once that's So basically, like, you know, I don't know if you like read his article and stuff. It's like, it was basically just like, you know, remember like with Olympus, like how like they had like the elephant sucking its own dick and stuff, like that meme of just like 3-3 and this and that, like that was
Yeah.
associated with it. It felt like Genesis was a more like complicated, convoluted of that, because like, you know, 3AC would take a loan out from like Genesis and they would like go buy BTC, turn to 3AC, use that as collateral, and it's like ho for Kafka kind of thing. And like the assumption was like, oh, like this is trading at a premium, and like we'll wait, you know, we'll deposit the BTC and to turn it into GPTC. And that takes 3 to 6 months, and then we sell it. And they just like, you just play that arb. And because there's a premium, that was like super easy. But once that turned negative, then the trade became unprofitable. That was like kind of like beginning of the end. And I remember seeing on like crypto Twitter, like that's how like, yeah, that was like a big drop. That was like the most important thing from last cycle. But like, yeah, it's really Kiet, welcome back. Technical.
Sorry about that, y'all.
Yeah.
Continue.
Yeah. Well, yeah. So anyways, like what's your thoughts on like what's going on with like Genesis? Because like apparently like they saved, like the parent company ECG saved their ass like 2 times already, and like that's going on. Like what do you think?
Yeah. Well, what's crazy to me is these sort of like over leveraged positions. All right, I'll tell you. I think this is funny. Every time I talk to a fund or somebody in the space, you know, the last couple of weeks, I always go, "Hey guys, how's it going? How you doing?" And I go, "No exposure." Me?
No exposure.
Nothing. I am completely fine.
Yeah.
Completely fine. You know? And I always go, "Oh, that's cool," because I'm not. They're like, "Oh, you had, you know, lots on FTX." I didn't have a lot on FTX. I would never put all my crypto on a centralized exchange, right? A little bit of damage on FTX wasn't fun.
Mm-hmm.
But what really happened was, you know, I had one leveraged position in Solana that was liquidated, right? So, but that's still collateral damage. That's FTX damage. So I think that's being honest, right? When Luna started blowing up, for me at least, the writing should have been on the wall for some of these sort of like 3-3, like extra leverage positions where you're borrowing to take out more, and then you're borrowing against what you borrow to, you know, yeah, just completely
the DGen box.
Juice it up.
There's something called the DGen box.
Yeah.
I remember some friends showing me that. I'm like, I was like, the name is the DGen box. Like I'm a DGen, but like this just sounds like box I don't want to be in, because like it's just like musical chairs. Like when does the music stop for the DGen box?
And you know, when Luna blew up, I felt like for everybody, I mean, you know, Sam included, I'm sure he thought this would never happen to him. You know, they should have stopped with this madness, right? Stop with this extra leveraged up lending against their assets. Like it's going to crack. It's pretty obvious that if thing blows up, it could be bad. And for them to leverage that hard is just insanity to me, right? I do think we'll see regulation around centralized exchanges, around some of these institutional OTC desks. I think we're going to see a lot tighter grip around them, which I think is necessary. I think where it could get overbroad is if they try to extend that to DEXs and decentralized protocols. I just think while, you know, the activity may seem the same, the plumbing's very different, right? So we'll see, man. But
what is the biggest, like, let's get into bear porn. Like, what is the biggest like train wreck disaster you've seen in like the bear of like just complete like collapse and chaos?
That's a good question. In the bear, this one or last one? I've seen
either.
Yeah. I mean, I've seen like some pretty good projects. I saw like an ETH futures project that I think made some sort of poor decisions to go to AVAX, and then an L2. I've seen them get wrecked when they were like very much like a darling. I've seen like I think Ohm is still doing some cool stuff and they're trying to figure it out. But I think a lot of just bad press. And look, I totally get we work with Ohm. I think Zeus did some really interesting things, and it was really important to push the space to that next piece, you know. But you know, I just think with the market blowing up, a lot of these projects, Tokamak is doing excellent, right? But like they really lost a lot of value. Like they lost a ton of value. Those guys have some cool things rolling out. We work with them closely as well. They'll have some cool things coming very soon. But I mean, I'd say in general, in this bear, just everything has been kind of like sucked out,
Yeah, like the oxygen has been sucked out of the room for like both, it doesn't matter if you have like a great project or a shitty project. And like there's still innovation happening. But, with Olympus last cycle, people don't see the tech. They just see 3-3 and number go up. And then like once the musical chair, they see the meme. They don't see the tech. They just see like the forms of it, like the meme. And that's what they can process, most people. And so, after like the huge decline in price and like they're still innovating. Like I see it on the range bounds. We've had like Jala and Indigo on, like they're doing some really cool stuff, but people don't see that. They see like, oh, like, like what three missed scam, this, and it's not. It's like they're doing cool shit, but like I feel like BTC was the same when it came out. Like BTC had like early on, like when it was a very new technology, it had like crazy run-ups. And then it collapsed, and people are like, "It's over. This is like not going to be anything." So it's just like history repeating over again, but with earlier projects on the application level instead of the L1 level.
Yeah, true. I think it's also sad. We worked with Maple for a while. Maple Finance.
Oh yeah,
yeah. I think Sid and Joe. I think those guys are. Yeah.
Yeah.
I think they're killers, man. They really are. But this, really kind of threw a wrench in this, under collateralized lending, because I mean they have a ton of toxic debt right now, but I think those guys are doing everything right, sort of just byproduct of the market right now, which is shitty.
Give me some more bear porn. What is the worst case that can happen with the regulation, with OTC debts coming? And so far 10 Fund says
that's not porn, that's a nightmare. That's a horror movie.
You don't know what I like, Dave. You don't know what I like.
Wait, how about this? What is like the worst thing that can happen, and like what's the best thing that can happen? Let's start off with like worst case scenario, and then to end it on like a more positive note.
Fair.
Sure. I think worst case scenario would be tight regulation around centralized exchanges, around any sort of trading, swapping desks with respect to digital assets. And I think the nightmare case is that you have to KYC the wallet coming in, right? And full KYC, meaning like if I send from a wallet into Genesis, my wallet, I have to say like who I am, address, everything, right? They've already kind of floated certain bills. I think that would be a nightmare because like then what happens? Everybody does a hop, and then the government's going to go, oh, okay, well, it's not that wallet. It's the wallet that you control that eventually made it to that desk or made it to that exchange, meaning not the wallet right before, but even if you hop 16 times, you could be committing a crime if you don't give up, let's just say your main wallet is 0x ends with 123, right? But then you go from this 123 wallet, you hop 15 wallets. The government could say, no, it has to be the wallet that you use on a commercial basis. So it has to be this wallet, right? They have some definition in there. I think that would make it like ridiculously restrictive, and people wouldn't want to mess with centralized exchanges, OTC desks. I think it could be a bit of a problem. I also think like the government could, again, continue with this sort of poor regulation by enforcement, right? Such like the Oki DAO decision. And they make some other ones. They saw this article on Gensler, and Gensler's like, we don't need any more rules. We have enough rules. Lawyers know the rules. Get lawyers and they know what to do. But what lawyers are saying is they're saying, hey, look, comply with Reg D, 1 year lockup, maybe Reg S, but that's tricky. Here, let's do this offshore structure. We're doing all this stuff, and it's been generally fine, but there's still a little bit of this trepidation, right? It's like, well, am I wrong? Oki DAO is kind of weird. What if they do another one? There's always a little bit of this uncertainty, right? So I think that's sort of like the nightmare case where they chop at governance even more, chop at decentralization even more, and they use SBF to prop up the reason why, right? I think we've seen governments do this before. It's like, hey, you guys can't take care of yourselves. You need Big Brother to come in. I think they've used that argument before. Governments have used that argument, and they could do it again. I hope they don't, right? Best case scenario would be, sure, maybe, a tightening of regulation around centralized exchanges, certain centralized desks. But then on top of that, they rolled out clarity, like here, a token is definitely not a security. Here you have, some sort of sandbox that once you launch for the, like Hester Pierce suggested, this first couple of years, you're moving towards decentralization. You should publish how you've turned this over and turned that over, and it's all transparent. Which again, going back to the policy behind the Securities Act, right, and the Investment Act, the reason behind these regulations are, for protection, for disclosure, right, making sure everybody has enough to make an educated decision. I think crypto does a 1000x better job than traditional equities. Like, you can't find shit on stocks except for something that's in, something you pay for that probably that company is sponsoring them or something. You never know. But in crypto, I mean, because of there's this sort of like tribalism for protocols, right? There's Frax maxis, there's Solana maxis, whatever, right? Everybody has their opinion. They're quick to point out why other projects aren't that good, but you could do your own research. You can go, oh, maybe that is true. Maybe Maple is shitty because they just don't know what they're doing. Then you dig in, no, it's actually Maple's doing everything they can to be excellent. It's just kind of a function of the times, right? I think that would be best case, right? I really do hope in the next 5 years we get some just clarity.
Yeah. The important point, it's the commonality between both these scenarios is there's some kind of action coming from the government. It's just a matter of is it going to be like heavy enforcement or real clarity? Yeah. It's just like it's either going to be either or. It's like that is like the horizon, no pun intended. That's coming. Yeah.
Okay, so
man.
I mean, what do you guys think about both of you? I'm asking like on the DeFi side of things, because all of this sounds really bearish for CeFi and Sexes, but like the Infura collecting your or MetaMask collecting your information sounds more doomsday and nightmare to me than these regulations.
That's more of like a MetaMask thing than like I guess indirectly with the government, but like that's more of a MetaMask thing. MetaMask is the one collecting the information. It's not directly the government. Meaning, like, the government can ask for it, but that's just like a matter of can people just move to another wallet? Can people just change their RPCs, which is not the most obvious thing in the world. Let's be real. I guess that comes down. Yeah, go ahead, Ryon.
I was gonna say related to that too. One thing I do, the government should really, really, I hope eventually spend time and do. And I used to be in this lobbying group called Proof of Stake Alliance. And I went and I spoke on the Hill. I spoke to congressmen about proper legal and tax treatment for digital assets. So we talked about the legal, but I think tax is its own sort of basket of issues because without like tax clarity, I mean, every time you swap arguably is a taxable event. Like how many people are like able to properly file taxes and do their books? I think it's nearly impossible right now unless you have a team of accountants and everything you do is sort of monitored and labeled and categorized at the time of the transaction. That's very hard for normal people. I really think this is not going to happen. To be clear, I don't think the government is going to do this, but I think they should. I forgot if it was an earlier president, like the 50s or 60s, and they wanted somebody. I think it was like liquor sales. It was some tax thing. And he basically said, listen, starting right now, here are the new rules. All stuff, tax-related stuff you did prior to this date is forgiven. But from here on out, here's how you file your taxes. This is what you do. You better do it or we're coming after you. And everybody said, okay, great, right? Because they had nothing to worry about. And I think if the U.S. government can go, look, this shit's just a mess. We got rid of 1031 exchanges for transactions, because before you used to say, if I swap one token for another, that's a 1031 exchange, no taxable event. They don't do that anymore, right? I think if the government could come out and just say, hey, look, this is how you deal with digital assets. We'll cut you a little bit of slack because we want you to start reporting. And then now that you start reporting, here's how you do everything, right? Like that would be awesome because it's still very much a big problem in the space.
Yeah, I've seen that as well for my fellow burgers. Yeah.
So, we'll see. We'll see how it goes.
Yeah. We're getting towards the end of this, and to like wrap up, I want to ask, like, what are some important lessons you've learned in your time, not just as a lawyer, but just as an active participant in the space?
Yeah. Well, I'll say this. Here's I think some good like tips for projects when you raise, right? You'll raise a couple $1 million. Don't like diversify your treasury. right? I've seen some protocols where it's like, okay, cool, we raised, and outside the raised capital, the token's out, our treasury's worth $50 million, not with the raised capital, but it's all in this asset. Man, take a few million, swap it out into stables, and just park it for a rainy day, park it for something extra, park it. I worked with this one different team where they had an early founder leave, and we were in litigation for almost 3 years, right? During that time, we went from sort of the bear to the bull, back to the bear, right? And we were in the bull, they were sort of like, fuck this guy. And he was just not doing it right. And I guess, was the attorney for the team, but I also fully agree that this guy was just, it was a money move for the early principal who left. But in the bear, everything got a little harder, right? If we're going to pay him in the token, they had to pay him a shit ton more tokens. Just dealing with fees got a little bit harder because we were working with like litigation counsel. So had they just set aside, as soon as the dispute started, or as soon as like things were just cushy, if they just would have sliced off a few mil off the top, they'd be in a much different position. So diversify the treasury, diversify it in stables, diversify it in ETH or BTC or whatever, right? I think that's like one big lesson learned. Get good offshore counsel. I kind of talked about that because it definitely matters. Think about your taxes up front, because like I have seen people get bitten by that later when their token launched and it's worth like many multiples of what they offered it. And definitely the founder doesn't want to be on the hook for any of that. What are some other things? I think speed. Crypto is definitely a very fast moving space, but that said, like you shouldn't like decisions. There aren't that many 24-hour or less decisions. Frankly, there aren't that many you need to make a decision in a week or less, right? I'll see that a lot. Like founders will just get like, oh, we need to do this right now. We need to do this right now, right? And it's like, okay, we're gonna do it right now. Okay, we signed all the docs. Okay, the money's in. Okay, well, we told you to talk to the tax guy. Did you talk to a tax guy? No, we didn't. Oh, okay, well, now the money's in. Now you have a fair market value on your protocol of $50 million. Now, what do? We have to align this so you can handle your tax piece, right? And a lot of it is just the founder, again, in good faith, just not thinking about things. So
yeah. I want you to repeat that again, because like I've seen like not just like
so
being diligent, but I've seen like scammers are like, oh, you need to send this right now, this and that. Like literally, that's important. Like there's a reason why that time buffer exists.
Yeah, I was about to say, right? Like with phishing, sort of a rule with phishing in the space, or when you're getting like hacked or messed with, is you will be put in a situation where you have to make the decision quick, right? Send me this or you're going to get in trouble, or like, you better do this right now. And you're like, oh, you do it. And you expose yourself to a security risk. Similarly, it's the same thing. It's like, don't let the VCs pump you up. Don't let how excited you are to get this thing off the ground, make you blind to things that can bite you later, right? Taxes, proper like treatment of other founders, right? Sometimes founders get in, they get extra greedy. Like you come in as a founder, but you're not doing much. And you said, oh, I want, 8% of the network. And then it's like, well, you sign the docs, no vesting. I've seen that. No vesting on their tokens, no anything. They just get it. Then it's like, oh, well, you know what? I don't want to do this anymore. And this founder is going to leave 8%. Well, we have to come with a settlement now. But who in that situation, who has the leverage? Not my client, it's the founder leaving, right? Because you signed it, no vesting, let's say in this scenario. It's happened like a bunch of times, not just like once, So slow down. Make sure you thought about everything. Thought about yourself personally, thought about your project. Add time to your analysis, meaning goes, what happens 3 years from now? Okay, I signed all this stuff. This is what I got. 3 years from now, what does that look like? Is there any issues there? Just going through that exercise, you could spot a lot of these issues yourself. Mm-hmm. Be very honest with yourself about runway, right? Founders will go, oh, I'm going to raise for 18 months. Well, if you're raising right now, you probably want to raise for 24 months. And honestly, even if you say 24 months, it should be more like in your head, 30 months, because that 24-month runway never lasts 24 months. Never. Mm-hmm. Right? Never. So be conservative, right, with how you spend stuff, but be liberal in your budget, right? Because having a much, again, a bigger budget will save you if you have to cut things. Will save you if there's a bear. Will save you, if you catch a lawsuit, or heaven forbid you catch a subpoena, right? Gensler's asking, oh, we just need more and more people. We need more, SEC participants so we can regulate the space. What does that tell me? That tells me there's a lot more subpoenas coming, right? So, set aside stuff for things that you never thought was going to happen, right? Because you just might have said one thing on crypto Twitter, you might have did something that just piqued the interest of somebody, and it's very easy for them to just say, hey, informal information request, right? Which if you don't deal with that informal request, right, even though it's pretty formal with the letter, it turns into a full Wells notice from the SEC, and they go, hey, all right, we're thinking about suing you, thinking about bringing you in, give us everything, right? It's a trip, man. So, the idea of just like setting some aside for a rainy day, especially in this climate, I think doesn't ring more true. Like, now's really the time.
Okay. How about for a founder who is going out to raise right now and it's like a pre-seed stage? Like, what advice do you have for those guys?
Sure. Gone are the days, at least right now, of copy paste on another chain. Meaning, gone are the days of Curve on AVAX, right? Or, Ohm forks. Remember those? Those are pretty sick.
Right. So fun. If the APY doesn't have scientific notations, I am not aping.
Yeah. Just give me that yield straight to the fucking veins right here. Give it to me.
Yield me, baby.
Yield me.
For founders raising, have something like different. Be able to explain why it's different. I spoke to like 2 founders the last couple of weeks. On the first pitch, it was like, huh? Wait, what is this? And on second pitch, it was like, oh, okay, building some cool, variation of an MPC that's like open source. Oh, cool, right? Whatever it was. It wasn't that. But, have something that's interesting. Have it as developed as you can. Get it. It's pre-seed seed. You're not going to have something like super dope. But you have to get your shit together, have a clean deck, have something real, work on your pitch. Like, I think founders should understand that a lot of these VCs, it's in their best interest to say, well, think about it, right? The 3x over sub, gone. What VCs do now is they go, oh, okay, Kiet, you're raising? Awesome. I'm taking a vacation. It's December. I'll reach out to you in mid-January, not January 3rd, mid-January, right? And what's the VC thinking? Well, if he's good, he'll still be around. If he's bad, he'll be dead, right? Like, so they will slow play. So be ready for some slow playing. Be ready for like a little bit of rejection. It's much harder to raise capital now in the space. Stay behind your idea if you believe in it. Those angels that help you, or those early, participants help you. We help a lot of projects. Like, they will stay with you, but like now more than ever, your resolve has got to show through. Like, VCs are paying attention to this a lot more now. They're doing a lot more diligence, obviously. So again, with the pre-seed seeds, how much diligence do you have? Well, maybe not much,
right?
But like, you better have like a pretty good white paper. You better have some materials. Better have a decent background with your founders, if possible. So it's really, I think they just should step their game up and really understand, sort of from the beginning of the podcast. Sometimes you got to ask 40 times before you get a win, even if they're your friend.
Yeah.
Facts.
So,
amen to that.
Facts.
But, yeah. Yeah. Thanks for your time, Ryon. At the end of these podcasts, we like to do a lightning round, a little lighthearted lightning round. And so we'll get right into it. Kiet, go ahead.
Just for us to get to know you a bit better, it's not that a 2-hour convo is enough. So the first question is, what was your virgin crypto experience? And sexes don't count. When did you first touch the chain?
Oh, I first touched the chain. I think I might have touched it right before this, but I think this is pretty funny. Taylor Monahan, right, from my crypto, now Consensus, right? She was paying me in ETH when we were first working together, and she was like, "Send me an ETH wallet," and I was like, "Yeah, okay, here you go." So I send her a wallet, and she like goes, "LOL, send me an ETH wallet," and I was like, sent her the same wallet again, and she was like, "LMFAO, are you stupid? Send me an ETH wallet. And I was like, it is an ETH wallet. She's like, no, it's a fucking Bitcoin wallet. And I was like, what? I was like, how'd you know? She's like, no 0x. And I was like, what the fuck? I was like, what the hell is going on here? I just felt like so out of water, right?
Oh wow.
That was my first experience. Yeah. And after that, never forget. Right. That was a long time ago. Right?
Holy shit. Look how far you've come from mistaking a Bitcoin address for an ETH address.
Yeah.
Oh my
I wrote
God,
a Cosmos validator, right? Like I'm a big IBC guy too. Like I'm on every chain, man. So to go from that.
It's on every chain. Yeah.
Oh, I like that. Every New Horizons, Ryon is there. And second question for me is, what is your favorite off-chain activity? What is your favorite touch grass activity?
I competed in MMA for a while. I'm not going to do that anytime soon unless there's some celebrity crypto event. I might be down for that. But
charity
I still
MMA.
Do charity MMA. Yeah, smash some guy. I still do that. I still do a little bit of boxing. I do some jiu-jitsu. It's just nice. It's nice to get the stress out. Keeps you in shape. I think that's that.
Oh.
Short answers, right? You want from me?
Yeah.
Okay.
It's lightning. What's some advice you would give to your younger self?
Don't give up. Fail a lot. Fail a whole lot. And each one of those failures, they're not really failures. They make you even better you, right? Yeah. See where I am now. There was a lot of times I felt like quitting. There was a lot of times I was like, life is bullshit. Like I never got a win. I've never had a helping hand. How is this going to work for me? And it did.
Yeah.
Wow.
Failures feedback
and follow up 30 to 40 times. That's just those two things alone, I think will get you where. And then last question is, Ryon, if you weren't in law and in crypto, what would your professional career be?
Ooh. Damn, that's a hard one. That's a hard one because I think I found my thing in this space. I found where I'm happy to be, the rest of my life. If I wasn't working in crypto or law, I think I would still do something in tech. The idea that, you could be a part of something that changes the world, right? Sure, money is cool, but I always say, like, if you're on a mission and the mission is to like really change the game or change how you do things, money's byproduct. You'll get it, right? But I think this, ability and opportunity to say, hey, I changed the world, right? Like I was a part of Solana. Like those guys changed the world. Arguably, I changed the world. I was, part of, my crypto and Taylor. She changed the world, right? All of these SNX, projects.
Yeah.
SNX, right? Yeah. You guys, right? I get to say I was on the Flywheel podcast. You absolutely changed the world. If you get one viewer that comes out with a project that does something a little different and that changes the game, well, you get to take from that. You get to say, I was a part of that, even a small part.
Help influence that. Yeah.
Yeah. Like that's sick, man. Like that's what life's about, right? Because at the end of the day, you're not going to cut the money. You're not going to cut anything. You're going to be sitting on your bed, right? Watching the time tick away. And you're going to go, what did I do with my life? And you go, well, I did this, this, and this, and this. You can die soundly. So
it's deep.
It's deep.
Wow.
Doing shit that matters.
Effects. Yeah. Any other ones?
Yeah.
We need to make this a quarterly thing at least to have Ryon's Corner, founder hours. We should do it at 10 p.m. on a Friday.
Oh, that'd be sick.
We do a live stream for all the founders. If you're up, yeah.
Oh, that'd be cool. Yeah, we do founders hours, and maybe we get some of that I work with on the podcast. Yeah. Try to get Scully on the podcast.
Oh, we could get Scully. We could get who else? We could get there's so many different people. We could get Winston on the. I would love to have Winston on the podcast. I think he would be real interesting.
Yeah, I think Winston would be really interesting because he's sort of new to the game, but he got thrown in super deep. Super deep, So he might have
shout out Winston, shout out Derek, shout out Maria. We can't forget Maria.
Oh yeah. Shout out Maria.
Shout out Maria. Shout out Michael Cairo from the team. David Kaplan who just joined.
Shout out Alone as well. Yeah.
Alone's the man. Yeah.
Got a whole Horizon squad. And this 2 hours just flew by, honestly. I can't believe this This has been a lot of fun. I've really enjoyed listening to you and all your stories, and I can't wait to hear what you have in store for us in the future and see what you're going to do in the future. Keep changing the world.
Thanks, Dave. Well, you guys too. Thanks for having me on. I had a great time too. Shit went very, very fast. Would love to come on again. And yeah, however I can be of service to you or any of the viewers, anybody, just let me know.
Oh, where can people find you? Like people wanted to find Horizons Law.
Yeah, so you can check. You can DM me on Twitter, at Ryon Nixon or at 0x Horizons Law. You can also check us on our website. You can absolutely reach out to you guys at the Flywheel podcast if there's any issue. You can connect me, Dave. But yeah,
I've been doing that. I've been sending my referrals to Derek and Maria and whoever needs help. I'm like, oh, I know somebody.
Dave, you've been the man. Yeah, you guys have been really good to us. So thank you both. Thanks for having me.
Thank you.
It means a lot.
Thank you.
Thanks, man. Appreciate you.
Thank you, everyone, for watching this episode of Flywheelpod. We had Horizons founder, managing partner, Ryon Nixon on. Crypto vet, OG in the space, has seen the highest of the highs and lowest of the low. All parts of not just crypto, but of the human experience. I felt like when I was listening to the stories, it's like a soap opera. I'm just on the edge of my seat. I'm like, what's going to happen next? How is he going to get out of this one? Or how is this one resolved? Super both entertaining, but also incredibly informative. And any last thoughts on this one, Kiet?
Man, I hope the listeners took a notepad, wrote down the golden nuggets that were dropped in this whole pod. Because honestly, I'm going to go back again and re-listen to this.
Honestly, sure. You should run this back, just hear it twice. This is one of those ones that to get all of the information, absorb it, correctly.
And dude, more importantly, Ryon, he knows founder hours, and he has such
founder hours
boots on the ground stories that you just know this dude is for real. You can't make this up. So he also agreed to come on and do a quarterly or whatever frequency check-in and just give us a state. I think it's going to be such a cool thing that we're going to work together more in the future.
Yeah, this is such a fun episode. And you want to catch Ryon again, make sure you subscribe. Make sure you hit that bell button. Give us a like. Leave us a comment. Follow us on Twitter. Keep up with us on there at Flywheelpod. Hit us up on Telegram. Join our group at Flywheelpod. If you want to follow me on Twitter, I'm DeFi Dave 22.
And I am 0x_K.
And as always, we'll see you next week.
Peace.
Everything said on this episode is not financial or tax advice. This channel is strictly for educational purposes and is not an investment advice or solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice whatsoever. Please talk to your accountant and do your own research.